Hello people, in this video we are going to discuss about the tax reduction process. We already know what the government's role in tax is and what is the role of the regular citizens in the tax regime. That is, the government accepts the tax from the citizens. Now the question arises here is that the citizens work hard the whole year. They earn money and the government takes an appreciable part of it. If they are earning this much chunk of the income, then the government comes and they say, I want to have this much share of your pie. I just want to have it because it's my prerogative to accept the tax. Now just understand this way, that a citizen would never like to share their income to the government for which they don't find any apparent use. So the government is taking that money and the citizen says, the public says, I don't want to pay the tax. So they just look for the ways so that they can reduce the tax. And that is called as tax reduction. The way you reduce your taxes is called as tax reduction. We have several ways of reducing the tax. Basically, we can club them into two ways. That is tax compliance, and the other one is tax non-compliance, where the tax compliance is a legal way of reducing your taxes, whereas the tax non-compliance is an illegal way so that you can save your taxes. You need not pay that amount of tax to the government. Now let's see what are the ways you can work out on. The first one that we are talking about is tax compliance. We can have several measures here. The first one is tax planning. It seems quite easy and it's a good way of saving your taxes. Here you search for such thing so that, or rather I'll say, you make arrangements in your business or you make arrangements in your private affairs so that it can reduce your tax liability. For example, you purchase government bonds. Purchase the government bonds, or you invest in such kind of bonds, kind of fixed deposit, so that the government says, okay, if you save your money for, let's say, 5 years, at least 5 years, I won't charge tax on that. So this is a way where you can plan your tax so that you need not pay that much amount that you ought to pay. Then there could be other case here in the tax planning itself, which could be donations. The government says, okay, if you come and donate an amount of money on some charity basis, so that okay, I will give you certain kind of reductions so that I can provide you even 100% tax rebate. So such kind of things do happen. So that's called as tax planning. Now let's see the other way out, where you can go for the legal tax compliance way, and that is the tax mitigation. Here in tax mitigation, it is a situation where the taxpayer takes advantage of a fiscal incentives. That is, they look for certain fiscal incentives that the government is providing and they submit to the conditions. For example, let's say you are a businessman. Okay, let's make this guy here. He's a businessman and his name is Rajan. And Rajan thinks, okay, I want to open a factory. Let's say it's a shoe factory. And the government says, if you want to open a shoe factory, why don't you open it into an SEZ, that is a special economic zone. The government says, if you open your factory into the SEZ, that's the designated area where you can manufacture your products and sell it directly outside India, that is, go for exports, then I will provide you tax reductions. I may give you tax rebates for, let's say, 5 years. I won't ask you for any kind of money on whatever profits that you earn. So that kind of thing is also called as tax compliance, where you can reduce your taxes. Then there comes a third way out where you can reduce your taxes. Well, this is a legal as well as an illegal way. So we are just making it into a dotted line. and that is called as flouting of the tax norms. The flouting of tax norms. Tax norms. Here, it's a specific case which is usually done by big business houses or big corporate houses, as it is alleged that these corporate houses, influence the parliament, or that is called as the legislature, who makes the laws, who makes the tax laws, so that they make such kind of laws which makes them less liable to pay the taxes. They may influence these legislature people by giving them bribes, they may influence them, they may blackmail them on certain pretext, and there could be certain other ways out, so that the majority of the parliament, or that is the legislature, just hear what they say, and they make such kind of laws which are profitable to these people, these corporate houses. So that's another way out where you can flout with the tax norm and reduce your taxes. And now let's talk about the tax non-compliance, which is the illegal way where you reduce your taxes. In tax non-compliance, we have two ways so that we can reduce our taxes. The first one is the tax avoidance, and the other one is the tax evasion. In the tax avoidance thing, people just look for the loopholes in the tax act. They just find the ways where they can just escape from paying taxes. Tax avoidance is rather an interesting way out where you can reduce your taxes, because the taxpayer, he searches for such kind of provisions where he can pay less tax, and also he tries to reduce his tax liability, but here the arrangement will be legal. He makes such kind of an arrangement so that even if he gets caught, he will say that it's totally legal what I'm doing, and the government will have no answer to it. So that's called as a tax avoidance kind of regime, where you just check for the loopholes. Let's say there are three countries, country A, country B, and country C. Here in country A, there is a person, or there's a factory who wants, or rather who makes or who manufacture carpets. Let's say he manufacture carpets and he want to sell it to the country C at a good margin, but if he sells it directly there, he will have to pay a huge amount of tax to the government. Well, in such a case, what he does is he will sell these carpets to country B at a lower margin, so that he can show to the government that I haven't earned that much, so I need not pay a good amount of tax. And then in country B, he already has a factory which is purchasing this thing. So I forgot to mention this particular factory here, or this particular customer here, is actually the person of A, a person designated by A itself. He sells this item to country C at a huge margin, but he has chosen country B in such a way that they don't care about whatever you are doing, or they may have certain kind of laws where country B says that if you are purchasing something from another country and you are selling it to the other country, I won't ask you for any kind of taxes. So even in these cases, the country A and country B, in any of these cases, they don't have to pay tax. And when they're selling it, when this particular customer is selling it to the country C, they are selling it at a huge margin, so that the country C people says that, okay, I have purchased these items at a huge margin, so I don't get any kind of profit, so I need not pay any tax. So in this case, all these people save their taxes. This is kind of a loophole that these people try to search for. And then there's another method called as the tax evasion. In tax evasion, you just avoid the tax, you just evade the tax, that is, you don't pay it at all, or rather you pay it very less. For example, someone purchases a camera and comes to India. For example, in US, you purchase a camera, you purchase a photographic camera, and you come to India, and at the customs department you just say that I have purchased this camera, but the price is very low. For example, you purchase this camera, let's say at 20,000 rupees. Okay, in the US, certainly it must be in the dollars, but we are just converting it for the sake of our convenience. You purchase this camera for 20,000 rupees, and while coming to India, you just tell them that, okay, I have purchased this camera for only 5,000 rupees. Only 5,000 rupees. So the government says if you are purchasing certain items at such a low price, we won't charge you tax, or we may charge you, let's say, at 10%. So he only ends up by paying 500 rupees as tax. Otherwise, he would have paid 2,000 rupees as tax. So this is another way out where we see that you go for tax evasion. And the other way of tax evasion is your smuggle, or you smuggle things from the outside country, from some out country to some in country. Here you don't pay the custom duty at all. No custom duty. So in such a case, you ends up paying no tax. That's also a way of tax evasion. There's another way of avoiding tax, that is evading the taxes, not taking the bills, not accepting or giving the bills so on whatever purchases that you make in the market. For example, if I go to the market to purchase a chair, let's say it's a chair and I'm purchasing it and its cost was 2,000 rupees, and the shopkeeper says, sir, if you don't accept the bill, if you don't ask for the bill, I can provide it to you for the 2,000 rupees, and if you want to have this chair with bill, you will be charged 12.5% extra as VAT, value added tax. So in such a case, I'll be paying, or I'll be end up paying more than what I ought to pay, and hence I'll be evading the tax. I am not paying this tax if I don't purchase, if I don't accept the bill, if I purchase this particular chair. So these are the ways where you can reduce your tax. Certainly I will prefer that person should go for the tax compliances, that is the legal way, and should not look for the illegal ways out. Take care.